Today, the crypto market woke up nervous and restless, and you can feel it in every Bitcoin candle, every altcoin chart, and every headline coming out of Washington, Beijing, and Wall Street. Bitcoin is hovering around the $70,000 zone, a psychological level that has turned into a battlefield between fear and long-term belief. Just weeks ago, investors were celebrating new highs, institutional inflows, and political promises of crypto-friendly regulation. Now the mood has shifted, not to panic, but to caution. And that shift matters, because crypto is no longer moving on hype alone. It is moving on real money, real regulation, and real political power. Bitcoin recently slipped below $70,000 for the first time since the post-election rally that followed pro-crypto signals from the United States. That drop was not caused by a single crash or a sudden hack. It was caused by a mix of profit-taking, global risk-off sentiment, and rising political pressure. Big funds that entered through spot Bitcoin ETFs are still holding, but short-term traders are locking in gains. This is what a maturing market looks like. Volatility is still here, but it is driven by macro forces, not just tweets and rumors. Altcoins are feeling the pressure even more. Ethereum is struggling to reclaim strong momentum as gas fee discussions and scaling competition continue. Solana, which had been one of the strongest performers, saw sharp pullbacks as traders rotated out of risk. XRP remains sensitive to regulatory headlines, moving up and down with every whisper about future policy clarity. Meme coins and low-cap tokens are bleeding quietly, reminding everyone that when liquidity tightens, speculation is the first thing to suffer. Behind all of this price action is politics, and politics is no longer a side story in crypto. In the United States, crypto has become a real political issue. Lawmakers are openly debating how digital assets should be regulated, taxed, and integrated into the financial system. The approval of spot Bitcoin ETFs changed the game. It signaled that Bitcoin is no longer considered a fringe experiment by regulators. It is now treated as an asset that institutions are allowed to touch. That single decision brought billions of dollars into the market and permanently tied Bitcoin to traditional finance. At the same time, U.S. authorities are increasing pressure on illegal crypto use. The Department of Justice has made it clear that it is targeting criminal networks that use digital assets for money laundering. This has created a strange balance. On one side, crypto is being legitimized for investors. On the other side, surveillance and enforcement are becoming stronger. For long-term holders, this is not necessarily bad news. It suggests crypto is being absorbed into the system, not banned from it. While the United States debates how to regulate crypto, China is doing the opposite. China has expanded its crackdown on cryptocurrencies once again. The latest measures go beyond trading bans and target crypto advertising, tokenized real-world assets, and even technical support services connected to crypto activity. This confirms a pattern that has existed for years. China does not want decentralized digital assets competing with state-controlled systems. Every time China tightens restrictions, the global market reacts briefly, then moves on. Bitcoin has survived every Chinese ban so far, and investors increasingly treat these announcements as noise rather than existential threats. In the middle of this global tension, crypto businesses themselves are adjusting. Gemini, the exchange founded by the Winklevoss twins, recently cut a significant portion of its workforce. Layoffs are never a good headline, but they tell an important story. Companies are preparing for a more disciplined market. The era of unlimited growth and easy venture capital is over. Exchanges and crypto firms are being forced to operate like real financial companies, focused on efficiency, compliance, and survival. This kind of restructuring often happens before the next phase of growth. Another layer of political controversy is emerging around crypto investments and influence. In the United States, criticism has surfaced over foreign investment linked to crypto ventures connected to political families. Whether these stories lead to legal action or fade into the background, they highlight something important. Crypto is now powerful enough to attract geopolitical attention. Governments care who controls infrastructure, who profits, and who sets the rules. That alone tells you crypto is no longer a toy market. For Bitcoin specifically, the long-term narrative remains intact. Supply is fixed, demand is now institutional, and political uncertainty continues to drive interest in assets that exist outside traditional monetary control. When inflation fears rise, Bitcoin benefits. When trust in governments weakens, Bitcoin benefits. When regulation becomes clearer, Bitcoin benefits again, because clarity invites capital. The short-term price may swing violently, but the structure underneath is stronger than it was in any previous cycle. Retail investors often ask whether this is the end of the bull market or just a pause. History suggests pauses are normal, especially after explosive rallies. Bitcoin has gone through multiple cycles where it drops 20 to 30%, only to consolidate and move higher later. What is different now is the presence of ETFs, large asset managers, and political stakes. These players do not react emotionally. They allocate slowly and think in years, not days. Altcoins, however, will not all survive. Regulation will likely separate serious projects from hype-driven tokens. Blockchains with real use cases, active developers, and regulatory compatibility have a better chance of long-term success. Others will fade quietly. This is not bearish. It is evolutionary. Every financial revolution goes through a cleanup phase. The biggest takeaway from today's crypto news is not the exact Bitcoin price. It is the realization that crypto is fully entangled with global politics. Elections, regulations, international tensions, and enforcement actions now move markets as much as technology updates do. For investors, this means staying informed matters more than ever. Ignoring politics is no longer an option. Bitcoin is not dead. It is not collapsing. It is growing up, and growth is uncomfortable. Prices shake weak hands. Headlines scare late entrants. But beneath the noise, adoption continues. Governments argue because they cannot ignore it. Institutions invest because they cannot dismiss it. And individuals around the world continue to buy, hold, and build because they believe in a financial system that is open, borderless, and resistant to control. If you zoom out, today's volatility looks small. What matters is that crypto has crossed a line. It is now part of the global power conversation. And once something reaches that stage, it rarely disappears. It either gets controlled, integrated, or reshaped. Bitcoin was designed to resist control, survive integration, and adapt under pressure. That is why every dip feels dramatic, but every cycle ends with crypto standing taller than before. For new investors watching from the sidelines, this moment is a lesson in patience and perspective. Markets do not move in straight lines, especially markets tied to innovation and politics at the same time. The fear you see today is the same fear that appeared during past corrections, and each time it eventually turned into opportunity for those who understood the bigger picture. That does not mean blind buying or reckless optimism. It means understanding why prices move, who is influencing them, and what incentives are shaping decisions behind closed doors. Crypto is no longer just about code and charts. It is about power, regulation, and narrative. Those who can read all three have an advantage that most traders ignore. Short-term noise will continue. Headlines will flip sentiment overnight, and social media will exaggerate every move. But underneath it all, the infrastructure keeps growing, the user base keeps expanding, and capital keeps flowing in quieter, more strategic ways. That is how lasting financial systems are built, not in euphoria, but in uncertainty. In the coming months, clarity will matter more than excitement. Policy announcements, court decisions, and international coordination will shape the next major trend. Investors who survive this phase will not be the loudest but the most informed, disciplined, and emotionally controlled participants in the market. Crypto rewards those who respect time, risk, and reality. Today is not about predicting tomorrow's price. It is about understanding where the world is moving and positioning yourself calmly before the next wave arrives. That mindset separates survivors from speculators when volatility returns again.